Hey guys, hope you're having a fantastic day. Your old buddy Tim, back with another real estate ride and rant. And today we are writing and ranting about rental property. One of the questions that I get a lot being in the real estate business is, hey Tim, how can I buy rental property? Well, buying rental property is relatively easy. You buy it just like you do any other property. It's just with the caveat that you're going to rent it out rather than occupy. The big question that you should ask yourself is, should you buy rental property? And if you're thinking about it, why are you thinking about it? Are you looking at it as a means of investment where you are going to buy a property, put a tenant in there, hopefully for enough where they cover your mortgage payment while you build equity? Is the rental property part of an overall long-term investment strategy? Or are you one of those guys and gals who watch the infomercial about building wealth with rental properties, and you've just decided, hey, you're going to buy a rental property just to see how everything works? Well, you're killing me watching these TV shows. Yeah, the big question again is, all right, why? Why do you want to buy rental property, and are you really cut out to own property that someone else is going to occupy? And that is a big question for me, because am I going to buy a house or a multifamily or a fourplex and fill it full of people that I don't really know and trust them to pay the rent and take care of this really expensive asset? Because at the end of the day, that's what being a landlord is all about. Owning rental property is about providing housing for other people while they make your mortgage payment. Another question is, how involved do you want to be? Because I can tell you from experience, being a landlord is a pain in the, yeah, it really is. Because even though you've got someone else living in the property, ultimately it's up to you to take care of things. You're the one that will get the phone calls in the middle of the night when the toilet's backing up. You're the one that'll call, when the oven stops working or fuses start blowing, because people are paying you rent to live in a place that is inhabitable, that has everything working. You're not going to say, okay, I'm going to rent you this house. Now, there is no electricity, but I'm going to rent. It doesn't work that way. You, as the owner of the property, ultimately are still responsible for the condition, the care, and maintenance of that property. Now, you can use what is called a property management company or a property manager. This is an individual or a company you hire to handle all the day-to-day operational aspects of your rental property. They will find the tenants, they will interview the tenants, they will screen the tenants, they will collect the deposits, they will collect the rents, they will take care of the maintenance, they will field all of the phone calls, and they will do so because you're going to pay them a monthly fee to do so. And these folks typically earn their money, I got to tell you. And the cost of a property manager, that's going to depend on a lot of factors. Some of them charge a flat fee. Some will do it for a percentage of the rents. Some will give you a discount if you have more than one property with them. I'm not going to get into semantics of property management. That's a whole nother video. Just know that you can hire people to take care of the operational aspects for you. But again, at the end of the day, if something does happen to that property as the owner, it's still up to you to take care of things. If there is if there's a pipe burst and there's damage, it's up to you and your insurance to take care of that. If a tenant burns something down, hell, if they burn your building down, at the end of the day, that's going to come back to you. So the point there is, even though you can find someone to manage the day-to-day operations of that property, as the owner, ultimately everything runs downhill to you. So it's up to you. I think rental property can be a great investment if you know what you're doing. And that just because you saw a 30-minute infomercial or read a book or watched a video does not mean you know what you're doing. So there's a learning curve there. I think if you've got the credit and the money to invest without setting yourself up for any kind of shortfall, then you can think about it. One of the things that I'm dealing with right now is I have a client who owns rental property, and he has gotten himself into a situation where he needs to divest of some of this property quickly because he has vacancies that are pulling his entire portfolio down. So his issue is he doesn't have the deep pockets to keep the mortgage payments paid without those units being rented. And very rarely are units always rented. You're going to have, even if you have a tenant live there for a while, when they move out, there's going to be some repairs, there's going to be some paint. It might take you 2, 3, 4 weeks, even longer, to get another tenant in that property. So you're going to have to pay the rent while it is vacant. So, at the end of the day, whether or not you want to own rental property and become a landlord is entirely up to you and what you're comfortable doing. If you are comfortable providing housing to other people in exchange for having your mortgage payments paid while you're building up equity, then by all means, look at buying rental property. But again, do so wisely. Be very careful. Do not buy the first house that a realtor shows you and think that it's going to be a great rental property. You've got to do your homework. When you look at a property, you not only have to look at what are you paying for it to purchase the property, but what is the return going to be on an annualized basis? What is the value of the property going to be with those rents coming in? If you're buying a $125,000 fourplex, for example, you're probably going to want the monthly rents to be at least 1% or greater, which would be $1,250 to $1,500, just to cover the mortgage payment and put a little money in your equity. All right? So don't forget, it all comes down to math. Math. A rental property deal is only as good as what you can get out of it on a monthly basis when it comes to rents. Otherwise, you might end up throwing money in. If your mortgage payment is $1,500 a month and you're only bringing in $1,000 in rents, well, that's $500 that you're going to have to subsidize. So, all right, I have ranted and raved enough. The short answer to a very long-winded video is rental property might be a good option for you, but just make sure that you have the wherewithal to be a landlord, or you're willing to pay someone else to do it. And again, remember, at the end of the day, as the owner of the property, it all runs downhill to you. So, all right, guys, that's going to do it. Hey, if you are interested in looking at rental property or becoming a real estate investor, or need my help, sometimes my tongue gets tied around my teeth. If I can help you in any way when it comes to real estate, give me a call, 256-679-0704. Find me on the web, Real Estate Ride and Rent, or timknox.com. Oh, my mouth is tired.